Q3's over. That's a good thing. Working on Q4. I'm going to go with one prediction. There's going to be at least one update in the market in this month. We'll not worry about the quarter yet. We got a good start. The reason? Credit Suisse isn't going out of business yet. OPEC oil cuts. We got some Kim Kardashian news, you guys. Stay tuned. Mitch, how about that intro?
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders, investors. If you were part of that 6.5 billion selling balance on the close, you're not too happy right now. S&P futures are up 27 handles at 36.2850. We're a good 50 handles off that low at 35.7175. The buck, that's just hanging out. That's up 24.6 cents at 112.33. A little hope for interest rates. TLT is up $1.35 at 103.80. Crude, we'll go into more detail. Crude in a second here, up 365 at 83.14. Gold up again, 16.75. That's $3. Silver doing better on a percentage basis. That's up 43 cents at 19.47. Bitcoin, not moving with the market. That's bad for Bitcoin holders. Down 265 at 19,160. Also, Ethereum's down $40 at 12.92. We're gonna start things out with Mitch. And Mitch, how was your weekend? You got your loss out of the way on Thursday, so you didn't have to suffer with the Lions fans for another devastating loss at Ford Field.
Yeah, let's just say even when you're thinking about betting on the Lions, you don't bet on the Lions.
And also, I've had some suicide pools, and they sent, of course, everyone went with Green Bay, including me, holding my breath. But from 300 people, it's down to 40, and 3 people had the Lions, and I'm like, what are you doing? Like, never take the Lions. But people don't want to talk about sports; they want to talk about stocks. So where do you want to start with stocks?
Let's talk about some oil. Oil is definitely going to be on a lot of people's radars after we're getting rumors out there about oil prices jumping on reports that OPEC Plus could be considering a production cut. They have a meeting on October 5, and ANZ sees a significant chance of a cut as large as 1 million barrels per day, analysts at the firm said in a note. So we're going to see. Is this a little trick to get a little spike into oil, or will they actually come on in with their production cuts?
These things are so hard to follow, cuts, no cuts, everyone knows my philosophy or what they're doing with the cuts and stuff. But the only thing we don't know what OPEC's going to do. The only thing we can do is concentrate on the price action. The price action is positive here in the futures, up a smart 4.5%. That's helping oil stocks. Upper right chart for Dennis, who complains about the charts, who's not here yet. Your upper right chart is showing you, some resistance. We're coming off the double bottom, so we have no double top yet. I guess if this is for real, in my opinion, you got the 83.32. You got this one pesky high at 83.57, 83.70. Above there, things open up again. But once again, I mean, if you're good, trade in the rumor or buy the rumor and sell the news or whatever, that the oil game is one difficult one to follow on that one. Is there any oil stocks that you want to look at, Mitch?
Yeah, of course, we can look at some oil stocks. We can look at the famed Oxy, right? I mean, that's the
Yeah,
one
what's
that
going on?
everyone's taking bets on. It's made its move back from 58 all the way back to 63.91 now. Doesn't look too bad. Almost back to the 64.50 where I sold it.
Ho, 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 ho. Wow. That now you see, it didn't get the big bump off Warren, but it is getting the big bump off increase in oil. I would say, man, up 2.5 bucks, 4%. Is there anything in there? 64. Yeah, a lot of people getting their money back. Let's see what happens at that pre-market high. That pre-market high is coming in real nicely with a high from last week. It's 64.27. So I'd be wait and see. I wouldn't be buying it up 230, but if I'd been scooping it up with Warren down here on a lower risk trade, a little swing trade here, I'd be hawking that 64 to 64.27 area. Exxon Mobil's getting a big boost off this as well. That's clearing a triple top. That's too bad. Filling a gap. Let's look for the gap fill at 90.52. Haven't got there yet for ExxonMobil. And let's go with CVX. Chevron, that's probably gapping up to 150. Wow, this thing really got shellacked, this 150 to 155 area. But these are short-term targets today based on the cuts.
All right, I'll bring a smaller headline as we wait for Triple D to join us in. Let's bring a smaller one here. This is going to be a Disney headline. TV channels owned by Disney are back on Dish Network Corp as the satellite broadcasting and streaming platforms after the two company tentatively agree on a new contract. A weekend blackout saw millions of Dish customers lose access to several popular Disney networks, including ESPN and ABC. And so the battle was there, and you know how it is. You need your ESPN, you need your ABC. So Dish Network coming in here with a new contract, trying to make sure that they have Disney on.
So that this happened over the weekend.
Yeah, and it wasn't only for Dish. Also, I saw mentions for Sling. I saw mentions on Fubo that they were having troubles with this. So it looks like there's tentative contracts that Disney is trying to rework and, of course, milk it a little bit, right? I mean, you guys need us.
What a haircut from the earnings. I mean, 125 down to 95. Whoa.
Are we down to the pandemic lows?
No, here's the pandemic 80. And yeah, but this is tough. I mean, it's up 87 cents on this. 100 sticking out to me, but that's still 480 away. I don't know if you're liking Disney down here. I mean, what was the June low? June low was 90.23. I don't know. I mean, I'm not. I would. What's a daily high? Just give me a daily high here. What's Friday's high? Right there you go. If this is really any good news, 97.48. There's your target. You haven't even sniffed that yet. So you're looking for a target, and if you want to get this, pick this up, and they come in and whoop the spoos down to unchanged. Maybe you could get Disney unchanged. Low close of the recent downslide since earnings. That close comes in right near the low at 94.28 was the low, 94.33 with the close. And yeah, I want to ask Triple D about that close there, Mitch, with the selling balances. They kind of
definitely. We need to ask him when he gets
they
on.
kind of they got the mop out, man. They're like, okay, it's the end of the quarter. I can't take the pain anymore. Just get me out on the close. I'll sleep this weekend. And that's what they did.
Well, guess what, team? You guys smash the like if you guys want my man Triple D on. Let me see those likes get a quick jump. Let's go ahead. Let's get him on. None other than the one, the only, with a Lions shirt on, Triple D.
Yeah, I'm wearing the Lions shirt because in Detroit, we accept moral victories. When you score 45 points in a game, it is like a win. So even though we lost, we still have a moral victory here. So this is how we celebrate in Detroit. 45 points, just like a win. So we're taking the moral victory and we're running with it.
the participation ribbons, the 7th and 8th
take
place.
Those.
Here you go.
We take those as Lions fans. We take the participation ribbons and we mount them on the wall because this is what we have. This is the team
Put them on
that we have cheered for 35 years. This is how it works. You get 45 points in a game, moral victory, participation ribbon, all mounted on the wall.
Did you watch it, Dennis?
Lions fans. It was a huge game.
Did you watch it?
Part of it, and then I shut it off.
Okay. Did you see the point where they stopped them on 3rd down?
No.
Yeah. Well, this is late in the game. They're down.
No,
one
I had
score.
shut off way by then.
Okay. I know this is going to bore people, but so it's 3rd and long. They're down a field goal. They shut them down. Oh, wait a second. The clock wasn't working. We got to redo the 3rd down. The guy, it's like 3rd and 15. They run a draw from like the 40-yard line. The guy scores a touchdown.
This is just the way Lions. This is like bad teams find a way to lose, and bad teams have the worst luck as well. It's both. So, if something's not going to work out for you, it's not going to work out. Like, that's just Lions' bad luck. They'll never have good luck. And they're poorly run, and it's just such a bad combination. So anyways, season's already over, but we'll take the moral victory.
Did you do a bus stop run there, Dennis? Did you run out to the bus there? We missed you at the top of the show. Did you go out to the bus?
No, it's an issue here, and it's a whole different debacle. My outdoor fireplace had an issue, and the pilot went out on my outdoor fireplace, so I stepped out there and there's gas smell.
Oh, man.
So then I'm like, I don't even know where the shut off. So I found there's 2 separate shut off rooms, and there was a shut. I'm like, where's the shut off for the gas? And then I found it. So yeah,
the life of owning a new house.
There,
Be careful on your smoke break, Dennis. Okay, be careful on your smoke break out there.
Yeah, I know.
Just a quick little.
Okay, Dennis, we got to go.
Bring us back in.
I want to go.
Reddit Suisse. What are we gonna go to?
I want to know about the clothes. What about the clothes on Friday?
You're trying to make me remember back to Friday?
Yes.
Like, I don't do all that.
There were some sells, and they hit it hard off the close, and we've bounced since. And sometimes you do see on these end of months or end of quarters, which it was, you sometimes see some turning points. So there was everybody just selling stocks, end of the quarter, into the end of the quarter. We basically closed on the lows, and we were up since then. So now again, we bounced 20 handles. So is this the turning point? I highly doubt it, but. At least it lines up with an end of the quarter because a lot of times you get overall turns there. I don't think the market's going to turn though, Joel, until we get that light CPI number. But yeah, there was some sell balances on the
Did you get anything on the cheap? Because I was predicting that you.
I can't remember.
Really?
Yeah. Okay. Well, a few things gapped down, like Apple gapped down. I remember that, and it kept going lower.
I saw that one. Yeah. So there really wasn't the corresponding bounce.
No, there was. It was kind of a straight sell-off. There wasn't like gap downs really. It was kind of a straight just selling pressure, straight sell-off. They had it pretty smooth, so there wasn't like like a boom and then a huge gap down in the close on the stocks. There maybe have been a couple that did that, but for the most part, it was just kind of steady sell-off the last 20 minutes.
Okay. All right. Overall market. I mean, I kind of wanted to say on Friday that was a definitive breach of the June low, going as low as we did, and then now we're popping up here today that June low basis. Whatever contract you want to use. I'm just going to call it 3640 because I know we've already rolled the contracts, but. That's the bogey, right? To get back above that June low. That was at basis this contract, it was 36.55. But you kind of feel like that was a definitive break of the June low yesterday, and then they jammed it up today. So we got some resistance ahead, that's for sure.
It hasn't been, and people just think, oh yeah, the shorts are just killing it here. It has not been easy shorting this market.
No, not
this market has been a battle for everyone. Even though we're going overall down, it really hasn't been that easy because there's wicked little short squeezes continuously here. I mean, we've rallied 80, 90 handles a lot of these days that we end up closing red. We've had wicked little rallies overnight or in the morning. It hasn't been like smooth straight down. It's been a lot of chop through it all.
Could this be a sign that we're closer to the end than the beginning?
No, I don't think so. I think we're kind of I think we're in the middle of innings. I think we're in the early innings of the recession. I think we're in the middle innings of, the stock market, bear market here. I personally don't think we're going to get back to all-time highs for a number of years. I think this is going to be a lot prolonged bear market. That's why I'm heavy cash. If I thought we were going to bounce back in 6 months, I just don't see the path to get there. I mean, there's just too many issues here. The economy, I think this earnings season is going to be an epic disaster. I've said that already. I'm very scared for this earnings season. I think that's why you're seeing pressure ahead of it. Every time we get a little bit of a rally, people are selling stocks. There's a reason Apple doesn't want to rally. We've said that already. I think you're going to see numbers here. Obviously, Bloomberg hinted to it. I think Bloomberg's going to be correct. I think the Apple numbers aren't going to be good either. I think there's just people who are strapped for cash, and I think it's going to start showing up in this quarter's earnings.
It was a double whammy. It was double whammy. It was Bloomberg and then Bank of America.
Yeah, and I mean, it adds up. I mean, are you really hungry to go, oh yeah, I got to trade in my 11 to get the 14 or whatever for a better camera right now if you're hurting for cash? I mean, yeah, the rich people are always going to, have money. And that's why, you see certain things, even in Ontario. So talking to my real estate buddy there who, it kind of keeps me, in kind of what's happening with real estate.
The crypto guy? Is that the crypto guy?
No. It's my friend's real estate agent. But anyways, he's, always tweeting out and talking about, the housing prices. So the average house in Ontario has fallen from the peak of 850,000 down to 650,000. So they've come down substantially. That's the average home sale. But he says everything above like 1.5 million is holding on and that's, again, the rich people are still rich. So the higher end stuff is still selling kind of, and the higher end stuff isn't really falling off. It's that middle stuff. So it's like the average Joe is, who was obviously stretched, and when the mortgage rates went down to 1.8% or 1.7%, some of these rates, they were able to get a lot more house. And that's not the case anymore. Rates have come up 4.5, 5.5, depending, where you're at. And, they're stretched now. So that's why you're seeing those houses that went from like 400 to 500 to 600 to 700 to 800 in the last couple of years, quickly coming back down because people just can't afford that much of a house now. So you're not going to get that much, at 4.5% or 5% as you are at 1.5%. So it's like a separation. Like the high end stuff is still selling, but the middle stuff, that's where it's going to hurt. And then I bring it back to Apple. I'm like, yeah, sure, the rich people are still going to buy a new iPhone, but what about the average Joe? They're probably not. iPhone's still half the revenue, so I'm scared of these Apple numbers.
All right, let's go ahead. Let's get into the kind of main headline from today. Of course, last week there was a lot of questions that the Fed could pivot if we have a financial incident or maybe start seeing some instability. Well, today you're seeing shares of Credit Suisse plunge nearly 10% in Europe's morning session after the Financial Times reported that the Swiss bank's executives are in talk with major investors to reassure them amidst rising concerns on the Swiss lenders' financial health. Spreads of the bank's credit default swaps, which provide investors with protection against financial risks such as defaults, rose sharply on Friday.
I mean, these European banks are an epic disaster. You keep thinking, how low can Credit Suisse go? What's the all-time high in Credit Suisse, Joel? That'd be a fun one. CS, how far can you go back?
I mean, I can go back to...
It's back to 2010 at $55. It's $3 now. Oh, yeah, keep going. Look at 2007. $80 a share.
79.29 in 07.
This one isn't buy and hold. This is buy and fold. I mean, $80 to $3 story. I mean, they obviously have some serious issues here. So when stocks go from 80 to 3, it's not a good bet that they're going to bounce back from 3 to 80 again. It's a better bet that they're going to go from 3 to 2. So
will we have another Lehman Brothers situation here?
Well, here's the problem. We don't even talk about a potential financial crisis. They may have that in Europe. We may have that. I mean, the banks are telling us we have that. Deutsche Bank, same thing, $7. This is a multi-year low. What's the all-time high on Deutsche Bank? Mitch, do the same thing. $100, I think it is.
I have
Might have been more.
Let's see.
We'll go back to the same time period.
Same time. 159.76.
$159 to 7. Here you go, folks.
You're down
just showing you.
94%.
If you buy the wrong stocks, you never get your money back. And sometimes it just keeps getting worse.
95% down. No worries.
People have to start getting out of their head that if I buy this stock here today, eventually I hit all-time highs again, and I'm going to make this kind of money. We're
Great
not
conversation,
in Kansas anymore.
Dennis.
There's a lot of stocks that are never coming back. Maybe the overall market's going to eventually one day. A lot of stocks are never coming back. Peloton is never going back to $180. I'll say it today. I mean, obviously, just my opinion. I don't have a crystal ball, but unless they come around and reinvent or cure cancer or do something, even if the cure cancer is probably not good enough.
Well,
$180 a share, never going back there. I mean, there's so many other stocks, same story here. They're just not coming back. Credit Suisse not going back. Deutsche Bank's not going back to $157 a share. You're literally 15 years later, and you just keep losing money. These bags continue to be bags.
One thing that they are considering is a name change to Debit Suisse.
Yeah, that might be.
That's a good one. I like that one.
They're gonna need to.
I like
what's the other one? RBS, right? Royal Bank.
Well, yeah, but it's gone. Yeah, so
it's gone.
Yeah.
What about Barclays? Is Barclays getting hit on this?
Oh yeah, Barclays, BCS. Well, England's got its own. You're obviously. You got the UK's got its own issues over there. They've thrown in the towel on inflation because the economy's gone south. So they're like, okay, well, forget it. We won't even battle inflation anymore. We start QE again. So they got problems. Major problems. There's European banks. There's a European bank crisis going on. Nobody's talking about it. So here's a whole nother can of worms. Honestly, there is absolutely no reason to just come in here. We need to stop. I think people need to stop thinking about how I can make money in the stock market and start thinking about how I cannot lose money in the stock market if you're investing wise. My investments haven't done well either. I'm 60% invested.
Yeah.
In the conservative stuff too. And it's still, even the conservative stuff's getting hit. I mean, and we haven't even talked, I said the consumer staples, they were coming for those. Look at Procter & Gamble in the last month. 150 to 126. Why do you want to own? It doesn't make any sense to have a P at 24 or 25 with 3% dividend. Why do you want to own that over cash? You don't. And that's why the stuff's getting sold.
Yeah.
The rates are hitting this stuff. Utilities, why do you want to own utility stock for a 4 or 5% dividend? I'll go and just get cash. XLU, 78 to 65. You know why? Because the rates have come up enough that it is competitive with these, and there's no reason to own a utility stock and take stock market risk if you can get 4 or 5% in cash.
Not where you want to be right now. They're hitting value. They're hitting growth. They're hitting everything.
They're hitting everything. But, with that being said, there's going to be some opportunities. I think if you find good companies, maybe at reasonable valuations in here, you'll probably be happy. But something trading 25 times earnings, like somebody was tweeting at me the other day, something's trading 25 times earnings is not a reasonable valuation. I don't care. It's consumer staple and it's cash flow. And it's always traded 25 times earnings. You have to revalue those stocks because we're not in a 1% environment anymore for cash. We're in a 4% environment, going to a 5% environment because rates are going to go higher yet. So if we're tracking that way, those stocks that were trading 25 times earnings don't make any sense at that. They make more sense at 18 to 20. So there's a revaluation of all of these bond-like type stocks, which is the utilities, the consumer staples. We're to say, well, they've traded 25 times earnings for the last decade. Why is that going to change? Well, everything changed with rates. We didn't have, the rates have been low forever. We've had QE. People are sitting in cash and they're not making cash. So they were using these as cash equivalents. Well, that's not the case anymore. So things have changed. So it's not reasonable to pay 24, 25 times earnings for companies that aren't really growing. It was before. It's not now. So I think people need to change that mindset and say just because, the average bear market in the last 10 years lasted 6 months or 9 months means I'm going to get my money back in 6 or 9 months. It's not the case. I'm sorry. It's not the case. We have completely changed everything. The Fed has intentionally changed it all. And what we need to do is start recognizing that valuations are going to contract. And you're seeing it immediately here. We predicted this on the utilities and the consumer staples on the show for a long time. Again, I was early. I was saying this back in June, and then they got hit. I was like, finally, they're going to hit. And then they had the ridiculous rally in July and August.
Yep. Yep.
I'm wrong in that. But you know what? Eventually, I'm glad I didn't own any of these things. I had, the preferred stocks, and I had the utilities in my long-term portfolio, and I had some consumer staples, and I sold them all because it didn't make any sense to have those stocks in your portfolio. We can get 4.5% or 4.2 in cash, and we're going to 5 because the rates are going higher because inflation hasn't come in yet. So that makes them less attractive. Again, there's a reason AT&T and Verizon go down every day. And that's because they're like bonds. T and Verizon are an epic disaster, and these are industries that are actually under attack. This is why I've hated AT&T and Verizon for a long time. It's $15 now. This stuff all sucks. So is it coming back next week? I think any type of bounces you get on these are met with all the bag holders getting ready to sell them again.
Do you see Comcast?
To come in here and just say, yeah, rah, all-time highs by the end of the year is just ignorant to the situation that we're in.
What about, did you see Comcast 2-for-1 stock split?
All of them, Joel.
What
these are value
not all
companies.
Of them. Not all of them.
Well, there's a few that have been holding
T-Mobile. Why is T-Mobile?
Because
why is that holding?
I guess it's the leader.
Yeah. But just real quickly, Triple D is.
But it's not a dividend play. T-Mobile. It doesn't even have a dividend. That's a growth. That's a different type of company. If you're in your stocks for a 4% dividend, they're hammering those things. And they're going to hammer them to 6 or 7% dividends because that's where it gets, where the risk reward comes back to owning them. If you can get 4% in a risk-free asset, you're not going to buy a utility for a 4% with no growth. It doesn't make any sense. You buy that utility for 7% because you pick up the extra 3. So they're going to hammer these things down till the dividends get enough attractive over the risk-free rate. But if we keep raising the risk-free rate, that means they keep hammering these things more. This is, just the way what is happening. I'm telling you what is happening here. Maybe it all changes. The only way it all changes is if CPI gets into check and the Fed pivots, or we throw in the towel like England. The UK, and just start lowering rates anyways. Then everything changes too. But either way, you're fighting the Fed if you own these stocks.
Are we paying up 45 for PE forward outlook on Tesla? I don't know. Tesla coming in here with their deliveries. Let's talk about it. Tesla's delivered 343,000 vehicles in the third quarter of 2022. The estimate was expecting 364,660 cars. So definitely missing there off of their deliveries. The total production was 365,000. So production-wise, they met, but they didn't meet the deliveries there.
You know what? I love Tesla. It's higher end vehicles. It actually should. This actually should hold up better than Ford and GM, which I'm going to say again. Some people are saying, people are still buying cars. I went through the car lot on the weekend, Joel. Just took a drive through. There's nobody there. There's nobody, just going through. Maybe it's just my town. But there was nobody going through that car lot buying cars. It wasn't like, you can't find a salesman. There's salesmen everywhere. I'm scared. Tesla, completely different animal because it's high-end cars. The rich people are still rich. So they're not losing all their money because interest rates went from 1% to 4%. They're probably making more money because they're sitting with cash, and they're getting more on it. So the rich people are still going to buy. So Tesla actually is a little bit more immune to a recession than Ford and GM. If that makes sense, you follow me. If that makes sense.
Yeah,
to
we
you.
are.
Makes sense
No,
to me.
we've had this.
It's higher end stuff is going to hold up a little bit better. But with that being said, there's a certain group that were probably paying up that couldn't afford them, and it's going to be those people they lose. So they will get some, hits there if we do go into a full recession. The valuation has never made sense on Tesla. It's a reason I don't own it, even though the company is the best run auto company out there. I love Elon Musk. If it ever came to a reasonable valuation, I would back up the truck and buy all kinds of Tesla. But it's never been reasonable for me. I'm concerned about the Twitter thing, but I don't know. If it came down to if it got cut in half from here, would I buy it? Probably.
Gap fill. For you all waiting for that gap fill back from July, you gapped up from 250.66 the next day. Looks like you already got that in the pre-market. No other low. The low that day, if you're looking for another level, is 243.48. These are just daily levels. Thursday in my my market update for pre-market press subscribers, I said they're shooting the generals, and that's what happened on Thursday. Boom, they took Apple out, bang, and then they took Tesla out, bang. The big
Yeah.
boys. So, if you're looking at these things and you're thinking, well, buy the dip, well, you're not even anywhere near the June lows in either of these issues. So, of course, Tesla will have, it will have his traditional, intraday rally of some magnitude. And if that is the case, yesterday's low is $10 away, 262.47. If I was trying to wiggle out, I'd be at like 262, 261 and a half, just, because they get those quick pops up, and then we'll see the closing price on Friday, 65 and a quarter. But really hard to find maybe under 240. But first things first, fill in that gap, which it's about to do. S&Ps are just kind of like, how many times have we seen this scenario? They just kind of sneak up in the pre-market and then get slammed. And then another thing that you mentioned too, Dennis, you said rallies. We were off at one point on Friday. We were off 40 handles.
Yeah.
Every
day, Joel. Every day.
Yeah.
There's no reason to sell the dip because we've had a million rallies in this sell-off. You've had so many rallies in this sell-off. There's no reason to chase and say, "Oh, we're down 100 handles. I got to sell now," because tomorrow you get a 50-point rally. I think you got to be selling rallies, though. I think that's just the way this market is. I think there still could be some more pain ahead. It's not cheap. I mean, I think if the market got down to 13 or 14 times earnings, that would make sense more when we're talking, of a 4 or 5% risk-free rate. When we're talking a 1% risk-free rate, 22 times earnings makes sense. So there's a revaluation happening here, and it doesn't happen overnight. It happens slowly. So again, the only way that changes is if the Fed pivots or when we see some CPI data that comes in significantly light. But other than that, if you've just been going just with the data and just following that, you've been selling stocks every rally, you're making money.
All right. Now, one thing I do want to let you guys know, audience out there, if you want to hear more about Tesla, it might be the bearish outlook, but I will be having on today at 1:45 p.m. Eastern. Come to Stock Market Movers. And I'm sorry, pre-market prep. I'm trying to be the best show out there on Benzinga, bringing on Gordon Johnson on at 1:45. Don't miss that, guys. We'll hear the bearish outlook on Tesla. I'm excited to get on in and see what Gordon's been working on. I'm sure he's going to bring some research, so we'll find out what he has an outlook on Tesla. That'll be at 1:45 today. Don't miss it. Stock Market Movers.
All right. New guest. We got a new guest here. Let's bring him on. Begole. How you doing, Webb, from Market Reader? This is one interesting guy here. Hey, Webb, how you doing today?
Very good. Glad to be here with you guys for the first time. Thanks.
Okay, so let's get the important questions out of the way first. Okay, is your real name Webster, or is this Webb just is it just a nickname?
It's my initials. First name William. I'll skip the middle name, so I go by my initials. Webb.
Oh, that's
Wow. Cool. Okay.
It's an awesome name. I love Webb. Okay. I'm like, that's a great name.
Okay. Yeah, especially with like the internet and the product. Yep, the product you're working on. Okay. Also, so we have diverse guests on this show, right? People that do a lot of different things. But this is our first guest ever to produce shows on Broadway. Okay. I mean, come on. Off Broadway, close enough. Right. So but just tell us, how you made that transition. And you're also a photographer, so like you talked to my daughter Emily, but wow, what a transition. What was it? What was the tipping point to make you dive into the markets?
Well, I started as a programmer, hobbyist programmer. I wrote my first program when I was 6. I've been a computer programmer like all my life, but I really pursued theater in college. But I did get a triple major, photography, computer science, and theater. Wound up producing off-Broadway theater here in New York for 5 years. It's actually more stressful than the market, even this market. So it was a nice transition to get away from theater and get into trading and doing a lot of technical analysis, trading equities, options, futures, etc. And in 2015 got into joined Jens Nordvig to start Exante Data. And that's since then we've spun off and created Market Reader.
So do you want to go to that thing in the background there first to explain Exante, or do we want to go? I know you gave us some great examples. What you guys tell us about Market Reader, and then maybe we can go into a specific example.
Sure. So Exante Data, we started that in 2016, Jens and I, and that serves the world's leading institutional investors, and we focus on macro risk and cross-border flows, etc. Since then, though, in this year, we decided we wanted to start a new product that would use our analysis to kind of reach out to a broader audience, more of retail traders, individual investors, and talk about equities and the actual moves in the market. And one founding issue that we wanted to address across everyone that we talk to, including our top institutional investors, is everyone wants to know why. Something moves in the market, whatever you're watching, whatever's in your portfolio, you want to know what just happened and why did it just happen? And we get that question across all levels. So we wanted to create Market Reader to actually answer that question. So first, to analyze what's going on in the market. So we watch, currently we're watching 11,000 US equities. We're going to expand that to basically everything. We're going to try to get everything, cryptos, currencies, commodities, global equities, etc. We're watching for any unusual moves. So we profile every single asset, and we know in multi-dimensional arrays, like what normal is, and we can detect if something is abnormal. And then we go and look for what's going on. We check news headlines, we check social media, we check other things that are happening in the market, calendar events, macro events, announcements, et cetera, and try to put a reason and explanation on that move as quickly as possible so that we can minimize how long it takes for any trader to understand what just happened in the market, and then they can make their own decisions about what they want to do with that information.
All right, let's go to a specific example here, because I know Triple D's ears are perking up here, talking about relationship-based trading and news affecting other stocks. You sent over this example of Carvana here. Walk through this example, what people are looking at. I remember discussing this when it happened on the show, but I got it up on the screen for you.
Absolutely. So what our system, this is a GIF of, or GIF, sorry, of what our system detected on September 29th, so Thursday last week. We detected at around 7 a.m. that Carvana was moving unusually. So you see that little first purple bar, we identify the purple bars as the unusual ones there on the chart. And we identified that it was moving, and that the only thing we could find was that there's a historical relationship between Carvana and CarMax, of course, and that CarMax just came out with earnings. So we were able to identify that the Carvana move was happening in sympathy with CarMax about 30 minutes, almost 40 minutes before it started coming out in headlines that everyone was noting that it was moving in sympathy. And then, of course, for the rest of the day, Carvana just sold off like 20%. So that's the advantage that we have. It's things like that, whatever the reason might be. This is a great thing that we can do really uniquely. I think I'm really excited about it, is being able to identify programmatically those sympathy moves as they happen and before they really take off, before everyone else has realized that it's happening.
I mean, it's nice. Like, I mean, I built my whole career of 22 years just trading relationships and understanding the intricate little relationships and the ones that are changing. I mean, a Carvana, CarMax one's kind of obvious, but can you identify relationships that maybe aren't so obvious? Like, does your system pick up like earlier, like, because sometimes like, why is that selling off? And then everybody's, oh, it's selling off because of this. I mean, I would think Carvana, CarMax, most any professional trader would figure that out fairly quickly, but some of these relationships are harder to figure out.
That's right. So we do analyze every relationship across all assets all the time. So when we have, especially in the moment when we have two hot bars, as we call them, where something's moving unusually, we have two stocks that are both having a hot bar at the same time. We analyze quickly the historical relationship between those two. How often do they move this direction together? And if there's a significant relationship, we will look at, is whatever's moving that other asset possibly what's also driving this one? And we're able to analyze too, like which one is having the larger move or the more liquid move. And that might also be a thing that's driving or explaining the sympathy move here. So it's all programmatic. So we didn't tell the system that CarMax and Carvana have a relationship. It
right. It figured it out.
Yep.
Which is impressive in itself.
And we also, at the same time, of course, we're looking across news headlines and social media, et cetera. So if this often happens, someone on social media, like Twitter, for example, there's an incentive structure for someone on Twitter to go in and tweet out the reason the stock is moving quickly so that they get the followers, et cetera, et cetera. So our system is able to pick up those tweets. Anything that's explanatory. We filter out someone talking their book or how excited they are if something's going their way, but the explanations on Twitter are what we're picking up.
Yeah, I was just going to say the disinformation that's out there, and we're actually getting a great example of that today. Like with, I mean, did you guys, pick up anything this morning off, the Kardashian news? I mean, obviously that has, not direct, but, was there anything that popped up on Market Reader? I mean, it's definitely not good news for cryptos. Could it analyze
That's right.
something as obtuse as that?
It will. We haven't added cryptos to our system just yet, but that is our next expansion. Right now, we're just focusing and really trying to hone in our models on equities because it's a system that we have a lot of eyeballs on. Dennis, Joel, and Mitch, you've all been on equities for a long time. So there's a lot of ways that we know how to try and analyze these questions and explain why things are moving in equity space. The answers are often different in the crypto space. So once we've got this landed, then we're going to move into crypto and start analyzing what's unique over there as well.
Now, we see the relationships there with stocks, but does it also go into, let's say, economic data that comes out and how that can affect a certain stock?
Absolutely. So we are tracking when there's releases or announcements, FOMC releases, et cetera. We've been tweeting out some analysis where we just kind of talk about what has happened in the past year on announcements, depending on a beat or miss. But we are picking up or analyzing when there's what we call a calendar event. That might be like an earnings event for the stock, but it might also be a macro event. And what we do then is we look at what has happened to that stock historically when this has come out, and we analyze the current move in the context of that. So it might be a hot bar, high volume, high return. Everyone's wondering what's going on. But when we say, oh, they just had earnings, and for earnings, actually, this is kind of a mild reaction, we're able to kind of put that context on the move.
Okay, tell us a little bit about MarketWebs and the tools you created, and who's it created for? Is it for sophisticated investors, amateur investors? Tell us about MarketWebs.
So MarketWebs was something I created even before Jens and I got together. But that's a technical analysis tool that really uses market profile and volume at price to identify value areas in all assets. It works on Thinkorswim, so anything that's charted on Thinkorswim, it'll work on. And it identifies specific areas of value as well as points where there was significant action, price levels where there was significant trading action happening. And if the market hasn't revisited those levels, we call them VPOCs, virgin points of control. Those act as kind of targets. There's one, I don't know if you could share the tweet I sent you, but there's an interesting one in the SPY that is showing that we have a significant price level down at 331. And that would be basically the inventory that was happening just before we had the COVID sell-off in 2020. And as we recovered, thank you so much. And as we recovered after 2020, there was a couple months of consolidation from around like September through November there. So the system has picked up that's a significant price level. And what we tend to see is that the price will come down, reach that level, tag it almost, and find support and bounce there. But the market will want to come to those levels and target them. So I really use them as price targets. Sometimes I'll use them as entries if I'm not already in, or exits if I am in. So it's kind of a roadmap, but it follows the same philosophy that we have at Market Reader. In both situations, it's not telling you what to trade, how to trade, what to buy, what to sell. It's giving you context and ideas and information. It's a tool for you. So a philosophy that we've had at Market Reader and Exante Data, and this is all that trading is a pseudo art, right? You use your tools and you use yourself and your own strategy and your own beliefs and what you bring to the table to make your decisions about how you buy or sell or trade it. but you need the tools to give you the information. And what we want to do at Market Reader, of course, is give you the information immediately, as quickly as possible, about what's going on, so you can make those decisions as quickly as possible.
All right, just want to mention last couple Mondays, Dennis and I, along with Christian Fromhertz, have been doing some Twitter Spaces. Dennis and I do figure it out, and we do get on there. But just kind of talk about the CPI or the recent data, what's going out of the quarter. I don't know if we're doing one yet today. I thought I saw something, but my organizational skills are working very good. But just one more thing for you, Webb, before we let you go. Sure. What about, I mean, does this thing sleep on the weekend or what's going on the weekend? Because, there are, I mean, obviously the move in the futures overnight didn't quite get to that December 2020 low that I was hoping for. But is there, is your product working at night so people can take the information and then wake up at 3:45, clean the eyes off and hit the screens, or is it something that's just more better use for when the markets are open intraday trading?
So especially when we add cryptos, that's the 24/7 asset. So that's running all the time. Right now, we are watching U.S. equities from 4 a.m. in the morning to 8 p.m. at night. Okay. So we're covering as long as we can on that. We're not yet covering the futures or some of these more esoteric things like Weekend Wall Street. You're probably aware of those CFDs.
Yeah. I watched that during the only time I really watched it was when we were really crazy during 2020. COVID. Yeah. And then I'm like, nah, just use my spoons. But anyways, go ahead. I'm sorry.
No, absolutely. Like our ambition really is to cover everything that's moving and to analyze it, to give that context. So as we add the cryptos, we'll be providing more information over the weekends. Our goal is next year to start moving into having a platform and a service that people can subscribe to and get alerts when things in their portfolio are moving and know exactly why they're moving, when they happen. Right now we're just building out the back end, building out those models, building out the tools, and probably our first product offering will go to enterprises and try to get integrated into brokerages and platforms like that.
Sounds like exciting. Webb Begole, founder of MarketWebs, also working with our buddy Avid Schneeman over there on Market Reader, MarketWebs. Great having you. We'll have to find out if we're going to do that 3 o'clock thing with Christian. Oh, yeah. It's always good though. I mean, because there's quantitative approaches, there's fundamental approaches, there's technical approaches, and a lot of different things. Triple D, I'm going to let him go unless you want to add anything.
No, thanks, Webb. No, it's great stuff. I mean, obviously I love the quantitative approach to the market as well. I've tried to trade the quantitative approach for a lot of years too. So love your stuff, Webb. Thanks.
Absolutely. Thanks for having me on, guys. Appreciate it.
All right. Thank you. Like always, threw up the link there in the chat if you guys want to check out marketreader.com and also maybe give them a follow on Twitter. All right, let's keep going.
Rally melt up, Joel.
What are you doing?
Is the bottom in? Is the bottom in?
Yeah, we've called 9 of the last 14 bottoms. So
yeah. Is the bottom in? That's what everybody wants to know.
Is it the Kim Kardashian bottom then?
The Kardashian bottom. You're right.
Let's not go there.
It's the Kardashian bottom. I got to get in there.
You see how I jumped in on that one?
I'm not touching that one, man. But
are you going to pay $1 million? That's the question.
Shake out the shorts.
Kim Kardashian agreeing to pay more than $1 million to settle SEC charges, failing to disclose a payment that she received for touting a crypto asset on Instagram of all places. This case is a reminder that when celebrities or influencers endorse investment opportunities, including crypto asset securities, it doesn't mean that those investment products are right for all investors. Gary Gensler stepping up, the chairman of the SEC, going after Kim Kardashian.
Gosh, Matt Damon, look out, buddy. I mean, I don't know, it's slippery slope here. So multiple thoughts here. One, I don't like all these, celebrities promoting all this crypto as well, because, a lot of people lost a lot of money here and they're like, oh yeah. So, getting paid to promote this stuff, I think is, slimy in itself. But with that being said, there's a slippery slope here. I mean, how far do you go down? What's a celebrity and what's an influencer? Because there's a million people on my Twitter feed, pumping crypto all the time. Yeah. So you're going to start going at them. Where do you stop? Like Kim Kardashian, obviously the very high-end celebrity. So where do you go down to? Are you going to start charging? Are you going to go charge Matt Damon now? Similar. Obviously, you had the crypto commercial. Did he disclose? I don't know if he disclosed or if he didn't disclose. But it's all just a slippery slope. I actually don't really like that they're doing this, for the simple fact is I don't know where it stops. So they need to draw a fine line on where they're going to, not allow people, because everybody talks their book. Where do you stop? That's the question.
I saw, not to directly address this, but I think it was in Barron's either the last week or the week before, that she was getting into private equity and funds, and so they were like, "Oh, this is it. This is the super top of the market." I think it was Kim that was getting into it. I mean, you're right, Dennis. It is a slippery slope.
Yeah.
How do you trade this? What trading information is this? I know absolutely nothing. I'm just looking at Bitcoin, and I would just say that it's been mirrored in this lower range here. I would say it's not a good sign that it's not rallying today, because it has been going with the market as of late, and the market's up. So it just seems to be just not what it was. It's just a trading range and a hedging vehicle. I mean, hedging. I mean, just people trading the currencies off each other, the cryptos. I don't know where the pizzazz is anymore. But down 255. That's over 1% with the market up. I would
this
say
just is holding, and it's a NASDAQ stock. It's been holding up. NASDAQ has been trying to hold those lows too. We're just kind of meandering right around there. If we go to the dailies, see the lows. Yeah, we undercut it a little bit there on Friday. So the undercut and rally, some people are gambling that because they're buying stocks here this morning. But when the NASDAQ really seriously takes out that support, if it does, Bitcoin will probably take out its support as well. We were just talking relationships with web. Crypto are very positively correlated with the NASDAQ.
Let's go to the next headline. Yep. Let's go to Goldman Sachs upgrading here. Wells Fargo to a buy at current levels. They're saying that we see Wells Fargo as an unappreciated earnings growth story due to best-in-class revenue upside and efficiency improvement from rates and loan growth-driven NII. So I don't know. Maybe they see something that we don't.
Well, they're downgrading Citigroup too, so it's a pairs
they're playing
trade
some kind of games here. Downgrade on Citigroup, upgrade on Wells Fargo.
Must be relative valuation call here. Full disclosure, I'm long Wells Fargo, just in the overnight account here, but I don't know. I mean, I'm selling. This is just an overnight trade, so I'll be selling this after the open.
Yeah.
It's hard to be bullish any banks here right now.
I think on the intraday, at least you have some gap above on the daily that you can start trying to fill up there towards what's that low 141.44. So maybe it's a fill in there.
Yeah, it's a real interesting area here, Mitch. You nailed it. You got a gap from the top of yesterday's range, 41.14 up to exactly what you said, 41.44. So it's kind of hard to say, yeah, it's going to stop dead at 41. But I don't know. Let's the spoons just continue to rip. I mean, you could get up and fill that gap. I'd use 41.
There's room to 42, but again, you're buying. It's a dividend, 2.93%. The dividend's not that great. The growth really isn't there. We're going into recession. Why do I want to own a bank? I don't want to own banks.
Well, do you want to own maybe a Peloton?
Is there news
Saw
on Peloton?
some Peloton news out today. It's with Hilton. A little partnership with Hilton. Peloton says that all 5,400 Hilton branded hotels will feature at least one Peloton bike in every fitness center by the end of the year. They're trying it all. They also got into Dick's Sporting Goods last week. I don't know if you guys caught that headline. They put themselves inside Dick's Sporting Goods, which I think isn't a bad call. I mean, if you can see the product, maybe you can buy the product, right?
The stock is massively oversold, Peloton, but I think eventually it's going lower. So I think this is due for 14 to 6. So, I mean, this thing is massively oversold. And, we're down from 170. But again, if you're buying Pelotons, don't think about the $170 high. Don't think about the $100 high. Don't even think about the $14 high, because the stock is not coming back. So I think the path of least resistance is eventually lower, but we're oversold. If you're looking to short this thing, I would wait for a good bounce to short it on. I think you're short in the hole at this point in time. I do think Peloton could eventually be under $1 long term. So, but I've said that for a while. I'm not jumping in and shorting at 7. I mean, there's not much left on the bone here. So I just don't see any reason to own this.
Let's talk about Hilton. Hilton's getting a little pop off this at a couple thousand shares. Hyatt got
Hilton cares zero about this. This is just up 1.1% because the market's up 1.1%. So Hilton, they could care less.
I was trying not to talk about Peloton, Dennis.
I was making sure Hilton's not getting a pop off Peloton.
If we were in the office right now, I would throw something at you.
The camera would have got off, and he would have just slung something.
I'd put you in a timeout. I'd be like, Dennis, go down and get our sandwiches.
You make them actually
Remember
do
those
a workout.
sandwiches?
Put them on the Peloton.
They were good, man.
Who was the guy? Mark? Was he the guy that made
the
He was good.
You know what?
Good sandwiches, man.
I'm almost
I get that
tempted
tuna melt. The tuna melt was awesome.
I'm almost tempted to see.
Do with guys? Tuna melts.
I was almost tempted to drive. I drive by that building, went downtown. Actually, went downtown this weekend, and it was busy. I saw. Just to let you guys know, I'm just not all about sports. What did we see? Dear Evan Hansen. You ever hear about that? The play?
No.
You guys, go back in your caves. Okay. All right.
Anyways, rein us back in here.
All right, let's bring us back in. One trend that I'm starting to see more consistent is more of the de-globalization trend. And how this is going to affect stocks going into 23 is something that I think we need to kind of keep thinking about, because it just seems like everything is going more and more to that de-globalization trend than before. And I mean, I think this is going to lead into a long-term, maybe a decade of changing outlooks, especially in like things like energy, right? Everyone's like, well, I don't want to depend on that country for energy. I want to depend on my own country for energy. So I think this is a trend that we're going to continue to see expand.
Nail on the head. I mean, deglobalization is going to be something people are going to be talking about for a long time here. We've been a global economy, everybody working together on the same team. There's teams being formed here. And we can see it's East versus West. And, we're going to start bringing stuff back over here. And if you want to solve inflation, this is not the way to do it. Deglobalization is going to be very inflationary for North America because, one, people aren't willing to work for $2 an hour over here. So if we're going to start producing more stuff, which I think needs to happen in North America, prices inevitably are going to continue to go higher in the long run. So that's the bad news. The good news is we become less dependent on looking at China if we can start making stuff over here again. I think it needs to happen. Deglobalization might be here for a long time. For years, we talked about globalization of the economy. This is now separating, and we are seeing deglobalization going to happen, it looks like. And unless we make amends with China and the whole Russia situation with Ukraine goes away, I just don't see this global economy as in the same way that I would have saw it 3 or 4 years ago.
Broken.
Deglobalization, Mitch, it's a word. I mean, we talked about demand destruction. We've talked about a lot of different words. Deglobalization is a serious issue for stocks as well.
Yeah, serious issue, and I'm sure it's going to take charge, especially once we get, to the next presidential election. You're going to hear more and more talk about it in the midterms, so just keep your eyes out on that. We'll see if the solar trade really falls off the tape, right? First Solar has been hanging on for a while. Will it finally fall off the wagon? It's been hanging on here.
It got that upgrade, and it was on a bad day to give an upgrade. That was Thursday. What I'm looking at this is a trading range. And you know what trading ranges mean? Trading ranges mean, a ramp up for the next move. So, you have the bottom of the trading range here. You have the top of the trading range right here at 140. Actually, this is closer to 142. And I found a date going way back on this. Now the trend, I'm just going to go with, the easy technical analysis trends that I never follow. But you're in an up move. You have consolidation. Resolve the move of consolidation higher. I mean, that's the trend right now. But real tight trading range, and even the inside day on Friday for First Solar.
Technically, it looks pretty. I'll say that. As long
I
as
know you look at that and pretty, and I look at that like, whoo, man! It takes out 128. This thing's going to fill the gap at 80. But
and I'm long for solar. Full disclosure here, just in the overnight portfolio. But I have been buying some solar stocks. The relative strength in these things has been fantastic. So I mean, we have been in a straight down market, and this thing won't go down. So I kind of like that aspect of it. But if you like relative strength, this is the stock of relative strength.
Mitch loves relative strength. All right, I'm gonna let you guys.
Go ahead, Bill.
The time is passed me by here. 9 o'clock. Triple D. I will catch you at the top of the hour. Good to be back this Monday. Actually, it's synthetic Thursday for me because day off on Wednesday for the Jewish holiday. So if you're following the sell Yom Kippur, that's worked pretty well. Buy or sell Rosh Hashanah, buy Yom Kippur. That'll be Thursday morning. So take it away, guys, and be back with you later on 10:30 pre-market prep stock odds.
All right, have a good one, Joel. We'll get you on out of here. Dennis, any last words of wisdom for the beginning of the week?
I'm still just trading this market neutral. It's been a lot of chop. I'm buying dips, selling rips, buying the dip here, selling the rip here a little bit this morning. I'll probably sell a little bit. I'm going to probably sell more stocks here as the morning continues here. We're getting a nice rip to sell stocks into again. I'm not going rah, full on bullish until I see the CPI data come in light. I don't even want to anticipate it now because we tried to anticipate the last 2 times and it comes in not light. So, maybe this is going to be the time that's going to come in light. We're going to, but it's no point to get bullish until the Fed, at least we get a reason for the Fed to pivot. There's been no reason for the Fed to pivot yet. So there's really no reason to come in here, rah, bullish and say, stocks. The stocks aren't even cheap. We've said that. 19 times earnings, 20 times earnings is not cheap. Apple, 24 times earnings is expensive. So if it's 23 times earnings now, or whatever, because it's coming, it's still expensive. So I don't think there's no reason to get bullish until we see that CPI data come in light.
I agree. Have a great one, Dennis. Enjoy what you do best. Go back to your trading action. And last thing I'll leave off with, if you guys want to go ahead and catch more of kind of strategy outlook, like I'm going to mention right now, you guys got to come on over to live trading with, of course, Lord Ryan Zunaid and I. As we get into some live trading, you'll hear talks like this, where we're talking about a declining wedge here. And you guys can see here the rule of 3, as I like to call it, 3 peaks, 3 troughs, and then we're looking for that breakout, right? So a first peak going into that 139. Then you get a pullback area going towards creating a support, right? Then you get another push. So that's going to be a resistance 1, support 1, resistance 2, support 2, resistance 3, support 3. And when I get resistance 3, I'm always looking for a move back to support to create that last level of support to really create the volume profile that's going to be needed on the next swing up to resistance for the breakout. These are the kind of topics that we talk about on live trading. So if you want to know more about this kind of action, come on over to live trading and ask me about the rule of 3. I'll see you guys on over there, and then keep it going right here on Benzinga. And don't forget, later today, like I mentioned, we will be having Gordon Johnson joining Stock Market Movers. Don't want to miss that. If you want to think about a bearish outlook on Tesla, you definitely don't want to miss this interview. And then maybe you're an investor in Tesla, you're a bull. Come on over. You got a question that you want to battle Gordon Johnson on? Let me know. Hit me up on Twitter. I'm going to definitely be doing a little bit of crowdsourcing on out there. So we'll see what happens today on Stock Market Movers with Gordon Johnson. Up next, live trading. Hit the like on your way out, and let's keep going right here on Benzinga.